Okay, so on this video, just as you can see, I'll be using the live chat examples and I'll be making use of gbpjpy. I don't know, I've been having some issues with my entries, but let's see, hopefully this week I should be able to fix that. So, first off, you always start with your daily time frame. Okay, let's use the daily, just so you can see the overall structure of the market. So, currently, or up to now, GG. GBPJPY has been bullish. And then I can't even remember why I said this. Market even buy from there. So the market has been bullish. So that should be the first thing that you mark out. And then next you move to your next higher time frame, which is the 4 hour, depending on which you decide to use. I only go to my weekly and monthly when the market isn't clear enough, the overall structure isn't clear enough on the daily time frame. So for the current market structure, as you can see, the market has also been bullish. I don't normally use trend line, so let me just remove it. But just to indicate, the market has been bullish so far because just like I said on the theoretical part, you have to follow the current movement of the market, the current order flow. So from the 4 hour, we know that the market has been bullish. So what will you be aiming for since it's on an uptrend? You'll be aiming for this high, but then you can't just trade all the way to here. You just have to like because it has been bullish, so you never know when the market will reverse. So you just look for entries. Let's say 1 to 5, 1 to 4, 1 to 3. But if you're well experienced, then yes, you can target it. But then you're not like 100% sure if the market will create another higher high since it's on the higher time frame because it actually broke structure. If you can see, it changed character here. But then this was more like a sweep of liquidity chuck. It was just like a sweep of liquidity, not necessarily a change of character. So after that, you move to your medium time frame or lower time frame and then look for opportunities. And then based on, okay, let me start from this week, Monday. So Monday was 20th, 22nd rather. Okay, let me just mark out this zone. Yeah, and then we'll go to a lower time frame. I already passed this. Okay, yeah. So this was where the bullish move started from this leg, Friday, Sunday. Yeah, this was where it all started from. So basically, there was no entry around this area because, just as you can see, the market was bearish, creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs until what happened? The market finally broke it. And from the overall structure, the market is bullish. So what I meant to do, I meant to follow that bullish order flow, but then it won't just go up like that, obviously. And it was one selling, so I decided to sell off from this, what is it called, from this supply level. But then I took a buy first. It was just based on mitigation. It didn't really have a liquidity in front of it for me to utilize. On other videos, I'm going to explain the liquidity concept to you guys, but for now, let's just deal with the market structure. So I just entered off based on pure mitigation, and then the market actually took me out before hitting my take profit. That's why I said I'm going to work on my entries because I've taken 6 trades so far this week. Three of them hit SL before going in profit, while I missed three just today on GG. That is an exception of the other pairs like gold and other pairs that also trade. So after the loss, he eventually went in profit. I think the next day, yeah, on Tuesday. But then I took this on Monday. So looking from the order flow, after the market switched at this point, after it changed character and then pulled back, because definitely, as I said, after a move, the market will have to retrace. So that was the retracement that I tried to take from here. based on mitigation also. You didn't okay, you had the liquidity, but then on the 5 minutes. So the liquidity, let me see. It should be this leg. I don't want to go. If I should go to the 5 minutes to reset, and my laptop is actually lagging, so I don't want that to happen. So at this point, let me submit in. This point was what I use as my liquidity, and then I entered. I actually entered it because I missed it from here, so I just decided to enter from here. So I'll just go on with the trade. So it was going fine, it was going fine, but then it gave me another entry which I took. Then the market eventually took me out. And then I thought I was going to like start buying from there. It was a good side, I didn't buy immediately. I had to wait for it to break above, give me a full body closure. But then on the next day, the market eventually sold to my take profit. And then finally, we had the break above. So we had the change of character here. We had a change of character here, and then our first break of structure here. Because I can't use this as a major break of structure. Let me mark it out. BOS break of structure, and then change of character. Yeah. I said this was just a liquidity. So let me just delete that. Yeah. So we had our first break of structure. And after a break of structure, I said you should always expect a pullback, which the market did. It pulled back to this level. But then this was too, it wasn't really a clear setup because buying from here would have been risky, even though this was the last bullish candle, bearish rather. It's actually like a doji candlestick. So this was the last candle before the break of structure. And no, normally I would have bought from here, but as I said, it was too risky. So we had our first mitigation, and then before this other move, there was still a doji. I don't really trade candlestick, but then this is this should be a doji, and then the market mitigated it, and then this trade actually had the liquidity in front of it, but then I missed it, so I didn't take it. So I tried entering uh I tried looking for a re-entry to enter in the trade, which the market did give me, but then still didn't mitigate my entry. And then going on today, I see saw another entry, and then I actually extended it because this I just marked out the week since that was the only logical area to enter from, but then the market failed to mitigate it, and then I had to wait for the market to give me another entry, which it did. And then upon waiting for it, the market didn't mitigate and already went past my take profit zone, and I already have this rule that once it's past my take profit level, then I delete the order. So once I did that, I had to wait for it to give me another entry, which it has given now. So I'm just waiting. If this should fail, then I'll just leave gbpjpy for now. I'll just leave it and go to other pairs because the missed entries I'm having is too much. And then, as I said, I also need to work on my entries. So let's go to another pair. Let me see. I haven't really analyzed gold, but then I was able to catch a sell today on gold, even though I've rarely traded it. So for those of you who trade gold, you know that for a very long time, in fact, I think from 2023, yeah, that is when the huge bullish move started. Let me not really go back to be a waste of time. So we all know gold is bullish, so no matter what you should be buying. But then you have to be careful because since it's buying, it also needs liquidity to continue that buy. So based on this week's structure from Monday, let me see. Okay, yeah, yeah, this was where it started on Monday. Yeah, so we didn't really mitigate this leg, and it didn't sweep liquidity rather, so it just respected this and went up. I broke structure and kept on buying, but then it gave another inducement here. I don't really trade gold, so I couldn't spot all these entries except the one for today. So it mitigated this leg and bought. So after this break of structure, what did it do? It came back to retest. It pulled back, and then after it pulled back, we had another break of structure to the upside, which was this. Then after the break of structure, what do? You follow the order flow, you wait for the pullback, and then the market still gave another pullback because after this break of structure here, it pulled back with just a single candle. But if you should go to the 5 minutes, this black candle should be around 3, yeah, three bearish candles or so, and 1 minute will be more. So what did the market do? It actually gave an inducement. Yeah, it gave an inducement which the market cleared, and then after doing that, it bought, but then it still came back to take the leg that mitigated it as an extra liquidity before it continued its buy to the upside. So we had this other breaker structure. That's like the third breaker structure so far throughout the bullish move, but then gold started retracing from here. And then obviously this leg doesn't have liquidity. So what did the market do? Even though it respected it, but then it still came to take out this leg, bought again and still came down. So since this leg didn't have liquidity, since none of this leg had liquidity to buy from, because for me to enter a trade, there must be liquidity in front of it. And as I said on previous videos, I'll explain liquidity concepts so that you have better understanding of it, so that you have a better probability of winning in your trades. So during the pullback, I just decided to watch it. I didn't actually plan to take any trades on it, but fortunately, I was able to get one today. So during all this bullish move, the market actually gave liquidity, which the market took and mitigated this fair value gap before going down, and then still bought again, gave another liquidity, and then took it before finally mitigating this other block, because it's an order block because it was the last bullish candle before this bearish move, before this whole bearish move. And then what did the market do? It mitigated it. And then for me to enter, I had to go to the 5 minutes, because since this was the leg that mitigated it, obviously the market will uh, pull back to mitigate it in order for it to continue its move to the downside. So there wasn't really any clear entry here. So I just came to look for the liquidity that I can use in my entry, which was this. It was the liquidity I spotted. And then my entry was the entire candle. Yeah, this entire engulfing candle, because this was the start of the whole move. Yeah, this was it. And then it eventually sold. If I was the type of person that targeted a huge risk to reward, then my take profit would have been probably at this point, or even okay, it was at this low, but then it would have been probably at this point. But then I don't really target all these 1 to 6, 1 to 10 like other traders. But we're all growing, so probably one day I'll start targeting high risk to reward ratios. But for now, sticking to 1 to 3, 1 to 5 is actually okay for me. Yeah, so that's just it on the advanced market structure. As I said, I don't want it to be too complicated, because when I started my own journey, watching different, it was so complicated because they make everything seem so difficult. So I'm just looking for a way to make it as clear as possible, so you all can understand and get the concept of it properly. So on the next video, I'll talk on point of interest. Yeah, then after the point of interest, then we'll move to liquidity, so you know how you can have a higher probability of winning. So see you on the next video.